Disney brought back former CEO Bob Iger back to the helm, so I thought it would be a good time to do a video on is Disney stock a buy now that Bob Iger is back at the helm. Looking at Disney's valuation, it's trading at a forward PE of 23.6. This is just about the lowest it's been in the last year and a half. Of course, the company was troubled at the pandemic's onset and earnings per share collapsed. As you see here below, Disney's earnings per share crashed from over $8 per share down to the negative areas during the worst parts of the pandemic, and it's only slowly recovered to $1.72. So let's look at a few metrics and answer if Disney stock is a buy right now. So first, let's look at Disney's cash flow from operations, and we see here a 10-year chart of Disney's cash flow going back all the way to 2014, and it was steadily rising from around 9 billion per year up to over 14 billion per year. And then, of course, the pandemic caused its cash flow from operations to crash. And even before the pandemic, it made a large acquisition of Fox, the assets of Fox, in order to roll out its streaming service. And so cash flow from operations have been depressed ever since it peaked out around between 2018 and 2019. It was most recently at 6 billion, less than half of where it was at its peak. And moving on, looking at Disney's total assets and long-term debt, we see here the total assets explode from roughly 90 billion to close to over 200 billion. This was following the acquisition of the assets of Fox, which is a more than $70 billion acquisition. To finance some of that acquisition, Disney borrowed heavily. So you see here total long-term debt was around 20 billion. It ballooned to close to 60 billion following the acquisition, and it has since came down a little bit down to 48 billion as Disney has started paying down some of that debt, but it'll take some more time for it to come down back to levels it was before they made the acquisition. It may not be, at that level ever again. If you look at it in terms of long-term debt compared to total assets, they had 20 billion in long-term debt compared to 90 billion in total assets, and so that was roughly a 1 to 4.5 ratio. And if we look now, they've got about 48 billion in debt to about 200 billion in assets. So still a roughly 1 to 4 ratio here, where the debt is about 4 times as much as, I'm sorry, where the total assets are nearly 4 times as much as the debt. Looking at its operating profit margin over the trailing 12-month period, most recently it was 8.18%. This was up from the lows during the pandemic. Understandably, it crashed. Disney's several parts of its business relies on bringing large groups of people together, and so of course the business suffered when there was a pandemic that was potentially deadly to many people around the world. It's understandable its revenues and profit margins would fall. It's bouncing back up now at 8.18%, but it's still far below the levels it was before the outbreak, over 24%. So if it goes back to these levels, then the operating income could more than triple. If we look at, let's say let's have a scenario here where we say operating profit margin will go back to 24% over these next few years, and we look at Disney's annual revenue at 82 billion. So 25% of 82 billion, let's just say roughly 1/4 of 80 billion would be 20 billion dollars. So operating income would be 20 billion dollars, far above where it was in the most recent quarters, more than doubling where it was recently. So investors have that to look forward to, this pent up demand for Disney's products and services. And we're already seeing that in one of Disney's segments. In just the theme park segment alone, revenue and operating income has already exceeded the levels from before the pandemic. already exceeded the levels from 2019, even though their international business has not come back yet. And international sales and profits are roughly 20% of Disney's theme park business. That part has not came back yet. That part is nowhere near recovery. But even without that, its operating income and revenue for this segment has already exceeded 2019. So there's room for this segment to continue expanding here over the next few quarters. Now, there is a risk here that investors should not ignore, in that worldwide economies are expected to enter a recession over the next few quarters, perhaps in the second half of 2023, maybe sooner, maybe a little bit later. And Disney's business is highly cyclical. It's highly dependent on the disposable income of consumers. And if we're in a recession and people are losing their jobs and people are not getting promoted, the last thing they're going to want to do is spend thousands and thousands of dollars on a trip to Disney World or a trip to Disneyland. And so that segment could be pressured in the event of a steep or prolonged recession. So there's a kind of push and pull going on in that segment, where over the next few quarters it's going to benefit from this pent up demand from international travelers that's going to get unleashed. But at the same time, there's the risk in that segment, in the event of a recession, that revenue and profits could decrease substantially. If you want to know just how much it could decrease, I have a video on my channel discussing what happened to Disney's theme park segment during the Great Financial Crisis, which was the biggest recession in recent times between 2008 and 2012. That goes into a deep analysis into Disney's financial statements of that segment during that recession, and I'll link to that video at the end of this video here. So if you want to watch that and kind of evaluate what could be the risks to Disney's theme park segment in the event of a recession. So that being said, all things considered, I would say that Disney's stock is a buy right now. It's a great opportunity for investors to buy Disney's stock when investors have been pessimistic about its prospects. Its valuation is relatively depressed. If we look at the forward PE of 23, it's the lowest it's been in the last year and a half, and earnings per share are significantly below its levels before the pandemic, and that's going to take a while to recover. Earnings per share, I don't expect it to go back to pre-pandemic levels in 2023. I don't think any investors expect that to be the case, but could they bounce back over $8 per share in 2024? Yeah, that's reasonable to expect. In 2025, that could be even more reasonable to expect earnings per share to approach $10 per share. And if that's the case, looking at Disney's share price around $100, you're getting that at a price to 2 years, 3 years ahead earnings of near just 10, a PE of just 10, looking forward a couple of years. And so I know that's a lot of assumptions and estimations to make, but I feel the risk versus reward here is worthwhile for Disney, for those interested in Disney stock, to go ahead and buy Disney stock right now. And you can be even more confident now that Bob Iger is back out at the helm. He did a better job at steering the company over the last 15 years compared to his predecessor Bob Chapek, who had drawn criticism from not only Disney fans but also Disney investors. And so there should be an incremental benefit from Bob Iger taking the helm. And in fact, on the day after the announcement, the Disney share price was up almost 6% on the day after the announcement that he was coming back to the company. So you could take that as evidence of what the market thinks of Bob Iger's ability to steer the company compared to his predecessor, right? Just in the fact of an immediate 6% bump before there was any changes made, before there was any evidence that he improved the company's prospects, just because of what he's done in the past, it gave Disney stock an immediate 6% boost. All right, so that's all I've got for this video. If you've gained any value, please go ahead and hit the like and subscribe button. It'll help me make more videos like this one, and you're gonna want to stay tuned for updates on what's going on with Disney stock, right? All right, so thanks for tuning in, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/parkev to get your 10 stock picks now.